I can tell you that our mint, we had a record month in September of sales going through the mint. You need higher prices in order for the mining sector to be incentivized to produce more ounces. We need long-term sustainable prices, likely over $100 an ounce, to create the investment necessary to produce more metal. And that's where First Majestic comes in because we're always got our eyeballs open for our next acquisition. I think those three criteria, if you use those as your basis of making an investment decision, I think you could increase your odds of success quite substantially.
Okay, ladies and gentlemen, so today we have Keith Neumeyer, the CEO and president of First Majestic Silver, on our show. And today we will talk about the US economy, we'll talk about precious metals, of course, commodity sector, and many other very interesting topics. So, sir, thank you so much for being here.
Well, Vladislav, it's nice to meet you for the first time and looking forward to the interview.
So, very busy times with the precious metals, of course, and also with a lot that's happening with the US economy. And I would like to ask a macro picture. So what's your take on what's happening with the US economy and what would be some of the things that you would be paying attention to right now?
Well, the U.S. economy is obviously pretty important to all of us. And, it does look like it's rolling over a little bit. Mind you, it's looking like interest rates will be dropping over the next couple of quarters. At least that's what, I'm feeling is going to be occurring, which ultimately could be good for precious metals. But, at the same time, it tells you, the challenges the U.S. economy is going through. But it is the biggest economy. I wouldn't definitely not write off the U.S. economy. It could easily go for a bit of a dip, and wouldn't be at all surprised to see the S&P and the Dow retrace by 20% over the next 6 months. And I think that'd be a very healthy thing. But it's still an incredibly important economy and something I wouldn't ever bet against.
Yes, definitely. And if you look at the recent economic data, do you see a slowdown or maybe with things around your company and everything? Would you see signs of economic slowdown in US?
I haven't seen much other than, all the public numbers that everyone else sees and, employment numbers and real estate numbers. And, I read all the data that comes into my feed I get from a variety of different sources. And, as I said, it does look like there is a slowing that's going down in the United States, but, and of course that's going to affect other countries like, likely Mexico, likely Canada, and, possibly even Europe. But we've seen Europe slowing down as well, with Germany, France, having their own challenges. So, we are definitely seeing recessionary type moves taking place in these variety of different economies. But, I really don't think it's going to be long lasted. The governments still have the capability of printing money. Unfortunately, that's not going to happen, or that's going to continue to happen. And they'll dig themselves out of any kinds of holes that are created. And again, that's good for precious metals. If we ever had a gold-backed dollar, I think maybe that would solve the issues, but I'm not sure if that's ever going to happen.
No, very, very unlikely. And so you have mentioned the US dollar, Keith. With everything that's happening with the structure of the monetary system, we can see how precious metals are reacting. Things do not look good for the US dollar for the long term, right?
Well, it's holding up pretty good. There is still a substantial need, throughout the world economy, for the use of the U.S. dollar. And, yes, it has declined. I've seen numbers, it's down to about 50% of, central bank holdings. And now we're seeing gold actually exceeding, what, foreign governments own of U.S. treasuries, which is an interesting stat. That's probably going to likely continue, but, what impacts that has over the long term, it's really tough to say.
Yep, right. And Keith, you have been very bullish on gold and silver for many, many years. And it looks like right now, finally, the metals are reacting to basically to the things that you have been mentioning for a very long time. But if we look at gold right now, what would be the factors that you believe are moving gold this moment?
Well, the first thing is that the central bank buying. I think that was a huge change in the market, and that's only happened in the last, 4 or 5 years. starting with China and then Russia and then, the BRICS and so on. It almost was a contagion where all of a sudden all these central banks, seem to want to buy gold. And, according to the stats I've read, about 50% of the world gold supply is being gobbled up by central banks. And, those buyers weren't there, 5 to 10 years ago. So, that makes a huge difference in any market. And we're talking about gold, of course. And, you have one embedded buyer in any particular market, it's going to affect price. And, that's why silver underperformed, and because the money was flowing into gold. And, then once gold started to be obviously breaking out, and then you saw the US government then start to point at silver as a potential critical metal, which is pretty interesting in itself. I think, once people woke up, they said, "Hey, well, what's the other alternative other than gold?" And silver got a bid, and silver's exploded, as a result of gold taking off as well.
Just a very quick break, guys. So I've spent the last 12 months creating this course, Wealth Building Blueprint. I've put an unbelievable amount of effort into it. I cover investing, trading, speculating, business. The course is perfect for people who are still relatively new to this wealth building process. And I also offer 3 days money back guarantee. No questions asked. If there's absolutely anything that you're not happy with, you will get your money back. There's also a private community where you can ask me any questions, you can talk between each other, you can share news and things like that. The link will be in the description. Right now the course is at a 70% discount, and let's continue with the video. And Keith, I think you're one of the best people to talk about sentiment in gold and silver. So if we look at the big picture, would you agree with the statement that retail investors in the West are still not involved with gold and silver that much?
Well, First Majestic owns our own mint. We've been selling silver retail products to our shareholders and other silver investors, for over 10 years now. And so we get to see, a lot of the flows. And these are generally, as you said, retail investors. And when the metal is running, and we're specifically talking about silver, they tend to jump in and chase. And when the silver price is dropping, people tend to stop buying. And I think that happens in stocks as well. But talking to dealers around the world, we had, in the summer, when silver and gold, well, when gold specifically broke through about $3,000 an ounce, there was a flood of people holding, metal that they had bought, 10 years previously at, sub $1,000 or whatever price they may have paid for it. And they were, selling their gold back into the system. And that was happening throughout Europe. And I know in North America as well, it was happening. And, retailers in Florida and elsewhere in the United States were, having people come in with, their old stashes. But now over the last month or so, or 2 months, that's really stopped. So that supply is kind of now gone. You had all those people that were taking profits. And I think that's one of the reasons why we had the tightness that we've now had, in the silver and gold spaces, because a lot of the supply that was coming out, over the summer months just stopped. And, which is interesting to watch. But I can tell you that our mint, we had a record month in September of sales going through the mint. So, the retail investor has not stopped buying, and I see the sales coming in on a daily basis. And every day we're getting quite a lot of flow coming into the silver space.
Okay, that's very interesting, Keith. And so what would be some of the factors, so purely from investing perspective, what would be some of the factors that you would look at to determine if gold and silver are relatively overvalued? Now, that could be short term, of course, but just to decide when to get out, I suppose.
Well, I don't think they're overvalued. So, I'm a triple digit silver guy, and I invented that phrase, over a decade ago. So, I think we will see triple digit silver. Hopefully it doesn't happen tomorrow. My prediction was by 2030, we would see $100+ silver. I did not predict silver is going to get to $55, in the last couple of weeks. That was a surprise to me. I remember being interviewed back in January, February, silver was around $28, $30 at the time. I was asked in a podcast, what's my prediction for the year end 2025? And I said $40. Now, of course, I don't have a crystal ball, but that $40 was far exceeded. And metals, so gold and silver we're talking about, basically went parabolic. And any kind of parabolic move is unhealthy and has to be retraced to some degree. And that's what we're seeing now. And picking 55 as a top, if anyone picked 55 out there as a top, I would give them a medal. But we broke through 50 like ice, and it went straight up after that. And there's people predicting, okay, we're going to see 60, 70. No one actually really knew or knows. But 55, ended up being the top, and we've had a 10% retracement from the top now, which is pretty healthy in my opinion. Generally speaking, a correction, whether it's a stock or whether it's metals, can be anywhere from 10 to 20%. And those types of retracements are necessary in a bull market. And we are in a bull market. What that means exactly for price, well, it's very difficult to predict. But I would expect to see $5,000 plus gold and silver back north of 50 and likely over 60, in the coming months. But picking a time frame exactly when that's going to happen, is next to impossible. None of us know. But definitely, I can comfortably say that we're in a bull market for the precious metals.
Right. And if we could talk about a few of the factors that you believe influence why silver could go to triple digit.
Well, it's also supply demand fundamentals. Like this call that we're having right now would not be possible without silver. I created the phrase again a decade ago or longer, that there's no substitute for silver, and silver is a strategic metal. And I came up with those phrases because I honestly believe that's the case. You're not going to take silver out of a computer. You're not going to take silver out of a nuclear power plant or God forbid, a Tomahawk missile. But anything that transports electricity requires some silver. I came up with another phrase. Copper's the highway, silver's the glue. So whether it's an automobile or a refrigerator or a freezer or an electric oven or what, it doesn't really matter. All these electrical components that we rely on as the human race require some component of silver. And that's not going to change. As we electrify the planet and continue to electrify the planet in more efficient ways, whatever any particular government decides how do they want to do that, it still doesn't matter what technology they choose. It all requires silver. And the miners are producing about 850 million ounces of silver per year, which is flatlined over the last decade. And that's not changed much. It's fluctuated a little bit here and there by a couple of percentage points, but it's basically flatlined. Yet consumption has gone, not straight up, but it's gone up quite a lot. We've been in a now deficit for 5 years, and it looks like we'll have a 6th year of deficits. These deficits are being filled by above ground hoards, which are being depleted, and you need higher prices in order for the mining sector to be incentivized to produce more ounces. We need long-term sustainable prices, likely over $100 an ounce, to create the investment necessary to produce more metal. We need more silver to meet the demands of the world population, and currently the mining sector is not producing it. So we need higher prices, and that's why I'm so bullish on silver.
That makes total sense, Keith. So if we could move on to the mining sector, and of course your company, First Majestic Silver. So at the current commodity price, the free cash flow and everything looks very good for the whole mining sector, of course, because when the price moves so much so quickly, in time that comes in the cash flow and the financial statements and things like that. So if we could talk about the overall health of the mining sector and of course First Majestic Silver.
Yeah, well, First Majestic, we currently have the strongest balance sheet we've ever had in the company's history. I put the company together 22 years ago, and it's been very volatile over those times. I put the company together when silver was $5, and it hit $50 10 years later and in 2011, which is great times for us at that time. And unfortunately, silver went all the way back down to $12, by 2014. So that surprised a lot of people, and it created a lot of stress in the mining sector because it's difficult for the mining sector to move that quickly. There's mass layoffs and cutting back exploration expenses, cutting back development and expansionary investments that we normally try to do. But it's a pretty difficult 10 years because it's really been we had a bit of a blip in 2016, but and then we had another small blip in 2020, but these are short-term spikes, that the mining sector will, of course, enjoy for a short period of time, but it still doesn't change the investment decisions that mining companies make because they're not sustainable moves. Going to my previous point, we need a sustainable move that the mining sector believes in. The mining sector all of a sudden believes that $4,000 gold's here for the next, 5 to 10 years, and silver prices are going to be north of $50 for the next 5 or 10 years. Then all of a sudden you change the investment that mining companies are making, and that's the way they can then decide and feel confident in their investment decisions to build their businesses. But if you see this volatile metals market, it's really tough for management teams to really change their businesses because the mining sector changes quite slowly, as I said. So I think that, yeah, the balance sheets of all the major mining companies are improving dramatically. The junior mining sector is getting financed quite nicely. You see, constantly these small little juniors getting private placement money, which, was pretty dynamic. I don't think we've seen an environment like this for, I don't know, probably the last 14 years. So it's great to see these juniors getting money. And these juniors will then spend that money hopefully wisely and into exploration programs and have hopefully some successes. And that's where First Majestic comes in because we're always got our eyeballs open for our next acquisition. So it's if the junior sector is not being financed, then it makes it difficult for the bigger guys like us to grow our business because we're not going to go and spend a bunch of money on all these junior exploration plays because they're not developed, they don't have ounces, they're not permitted. We need much more advanced projects that these juniors can develop over time, but that takes time. They need a good probably 3 to 5 years at reasonable metal prices in order to make the necessary investments in their small businesses to build something of interest that a major company like ourselves would be interested in. So it is a cycle. The last bull market in the mining sector started in 2002 and it ended abruptly in 2011, 2012. It was a good 10-year run. I'm expecting to see the similar type of situation now starting. You can say we're maybe 18 months or 2 years into a 10-year bull market, which, who knows if that's going to turn out that way or not, but that's kind of what I'm expecting. And that's going to allow, the mining sector to really build itself and, get the metals out of the ground that we need as a human population.
Right. And Keith, I think that one of the big reasons why investors are a little bit scared of the mining sector was inefficient, the way companies invested during the last bull market. So would you say that that would be one of the biggest risks for the whole sector this time as well? And with that, would it be the energy cost? So I suppose what I'm asking, what would be the biggest risks for the whole mining sector right now?
Yeah, well, I'm not bullish on energy prices. I think energy prices are actually going to go lower before they go higher. Now, whether I'm right or wrong on that, who knows? But I don't think energy is the biggest issue. Staffing, is always an issue for the mining sector. It's a very small community, and a lot of younger people aren't getting educated in the mining sector these days. You don't see a lot of geologists or engineers being, coming out of universities. So, the mining sector, is always trying to chase talent. So that remains an issue. And so, you do see increasing costs of employment as a result of just the demand for quality people. Getting your average worker, labor individual, at the mine site's not really that big of a deal, particularly in Mexico. If we want, 300 people, for a new project, it's not that difficult. But getting that talent is always a challenge and probably will remain a challenge. Um, uh, geez, I lost my train of thought there. I had a couple other things to say. Why don't you ask me the similar question and I'll try to fill in the blanks. Sorry about that.
Sure, sure. So I suppose I was asking about the biggest risks in the mining sector.
Yeah, well, of course. Okay. Yeah. So there's metal prices, of course. There we all know that. It also permitting, is something because that's why, investors, need to, when they look at this sector, need to pick a jurisdiction. Like, I'm always very concerned about jurisdictional risk. Um, projects. I don't want to name countries that I wouldn't invest in. I don't think that's appropriate, but there's, several countries around the world that I just simply wouldn't invest in. Um, the United States, Canada, Mexico, Australia, parts of Europe, and even potentially parts of Africa. These are, you have to pick and choose, but jurisdictional risk is always an issue. But really, permitting, you mentioned management and their spending in the last cycle, and that you know can happen. Remember though that a lot of the management teams that were in place back in 2010, 2011 that were criticized for some of the investments that they made back then are still there today. Um, I also believe that that's why you're not seeing a lot of M&A activity. There's some out there. There's three major silver transactions done, over the last, 10 or 12 months, and there's been some interesting gold acquisitions as well. But I think there's quite a lot of caution in the executive teams to pull triggers on M&A because they don't want to get that same type of criticisms that they did receive in the prior cycle. So, but look, there's always a risk. We can talk later because I know you're going to talk to me about investing, but um, why don't we hold off until you come up to that segment of the interview, and I could just follow up with that question again.
Sure. And Keith, so what would be some of the plans for First Majestic Silver that you would be focusing on for the next few years? So what would be the main things that have your attention right now?
Well, we're a mining company, so we are at mercy to Mother Nature. That's a big challenge because when you drill out an ore body and you expect to see X amount of metal, there when you're underground, because all our mines are underground, and you can never drill out an ore body to the extent that you actually know for certain what's there. It would just cost you too much money to do it. It would take you too long to develop it, and it would be ridiculous to even try. Open pit mines are slightly different; they're more defined and so on. But yeah, so when you're mining, you're underground building 2 kilometer tunnels and you run into a void or you run into water or you run into an area that's got no metal in it. And you go, holy shit, we thought, this was going to be different. And, as a mining company, you have to be nimble and you have to be able to work through situations like that evolve. It's nothing that, it's not a fault of management. It's just a fault of just, it's just Mother Nature. The contrary does occur as well when you get into an area that's got way more metal than you expect that was going to be there. That's party time, and and those types of things do happen as well. So, we're always at mercy of Mother Nature, and then it comes down to governments. Governments change and their viewpoints change on mining, and recently, with Trump and with what's happening with the supply chains of metals and so on, moving around the world. I think the mining sector is being looked at by governments as a necessary part of their economies, which is a really good thing to see. But that's relatively new. That's only been in the last year or two. But we always have our eyeball on governments and permitting. We're always working our best, using best practices to make sure we're doing what we should be doing from an environmental and social perspective. We're always very careful. We treat those parts of our business with extreme care, and always following, the guidelines that are set out, and that takes time and efforts to do that. But mining is a very complicated business. There's a lot of moving parts.
Yes, definitely. So much to look for. And Keith, would there be some of the other commodities that you would be bullish on, maybe like copper, uranium?
Look, I'm a commodity bull, period. I think we're going into another a cycle here that's likely, as I said already, that's likely going to last 10 years. And who knows where these metals are going to go, but I don't like investing in illiquid metals. These rare earth, stories that are poking their heads, and in my opinion, sucking investors in. These metals are tiny, tiny little markets, and one new mine comes on stream and it could just destroy the market. Look at what happened in lithium. Lithium was looked at as a rare earth, and lithium prices exploded. Then what was the reaction to them, from the mining sector? They just built a bunch more processing facilities. Now today, we have more lithium available to processing facilities than we know what to do with for the next 100 years. So of course, lithium prices collapsed, and I don't see them improving, for the next several decades. When it comes to uranium, I would, be selective, but yeah, I think uranium's a good place to be. You've got a new renaissance from governments around the world now talking about building nuclear power plants, which is new. Prior to only a couple of years ago, nuclear energy was a sin. And, we saw European governments and, shutting nuclear power plants down, and which is ridiculous, but, replacing them with solar panels, which I'm a fan of, but nevertheless, I don't think it's a good use of money. Nuclear is much more efficient than solar, and wind farms, and other ridiculous use of capital. But that was the direction that some of these governments wanted to take. But with the renaissance in nuclear energy coming about, I think uranium's a good place to look at. But I would stick with the liquid metals. Copper. I came from a copper company. That's where my career started in the mining sector back in the early 90s, and I'm a big fan of copper. But there's only a handful of copper companies out there. There are some exploration companies, sure. If you want to go down that far in the investment space, you could always be lucky buying the right junior. But gold and silver are two very liquid markets, and still you've got to be careful and picking the right projects. But for investors, I would stick with the real liquid metals.
Yes, that totally makes sense. And Keith, purely from investment perspective, so what do you believe an average investor should look at? Maybe like top three things when investing in a developer. So what are like the most important things that people should look at?
Well, I think patience is probably the most important thing for an investor, because I remember Rick Rule said to me, well, not said to me, but said on one of his podcasts a long, long time ago, if you make, you fall in love with a junior miner, which you should never fall in love with any company, because these are investments. So try not to fall in love with any of your investments, but, just expect to have your first purchase drop by 50%, because your timing is likely going to be wrong. Doesn't mean the company's a problem. It just means your timing was a problem. So you might end up owning that stock for 5 years. And averaging down is important. So if you really think the company is and you have to ask yourself the question: the price today is X, and it was Y before. Why did I buy it originally? Are those fundamental reasons why I bought it then, are they still there today? So if nothing's changed and the fundamentals are the same or potentially even better, then why not average down about a little bit more? Everyone has to manage their own portfolios in their own way, and everyone's got different amounts of money that they can invest in the market. But just back of the envelope, that's you have to be prepared for that. And you might have to average down 2 or 3 times, to get a good average cost. And you got to be prepared for that as well. It's very unusual to buy a stock and have it go up 100% in the next, 30, 60, 90 days. It does happen, and when it does happen, take some profits. But, it generally does not happen. So, pick good management teams first. So you got patience. And then, you got to pick the winners, so look at the company in detail. Don't just, on a phone call, some friend of yours says, hey, you got to buy this stock because, he likes it or she likes it. Don't take other people's opinion. Don't take my opinion. It's just, look at it yourself and look at the management team. See what have they done before? Have they had successful businesses before? If it's a new young team of individuals, I don't want to take anything away from young mining professionals because there's lots of good young guys out there, and some of which I support. But from if you're not as close to the mining sector as I am, if you're an average investor that really is just trying to pick the next winner, go and look at the management team, and if the management team checks all the boxes, then go and look at their financial statements. I know a lot of people don't know how to read financial statements, but try to learn. How much money do they have in the bank? How much money are they spending? And that's pretty critical. Like if they've got $500,000 in the bank, and they got a market cap of $50 million, you kind of know there's a bit of a problem there. So be careful, because if they got $500,000 in the bank, they're going to have to go raise capital. And when they raise capital, that could be harmful to the share price. So, wait for them to raise capital first. And if you still like it, then step in when everyone else is stepping in at the same price. At least you've got partners in that investment. If one of these juniors raises 10 or $20 million at X price, you've got a whole bunch of investors coming in at that price. So you kind of know, okay, well, at least, a bunch of other people are willing to invest in that. So, I could probably tag along. And then hopefully some of these investors that are buying it know what they're doing. So, particularly if they're substantial investors or mining guys that know the sector quite well, you can just kind of follow them, with their ideas or their investments. And those types of investors chase management. So it kind of goes back to the management as well. So, and then it comes down to jurisdiction. Don't be investing in, rare earth metals or metals that never trade, or in jurisdictions that are, problematic. Go after management teams that are in good jurisdictions that have capabilities of financing their efforts and raising capital, and have reasonable share structures. And I think those three criteria, if you use those as your basis of making an investment decision, I think you could increase your odds of success quite substantially.
Yes, great points, Keith. I also think it's really important to understand your personality type, because for me, for example, I'm actually much more comfortable sitting there. Let's say you buy a stock, it's down by 50%. As you said, you understand the company sound, you put more money into dollar cost average. But then when you're still bullish on the stock and it goes up dramatically, for me, for example, it's quite difficult to take those profits, even though, I force myself, I'm disciplined with it. But I think that knowing that really helps you as well for the long term. So I think that's really, really important to understand what flaws you have, because that's how you will make your mistakes if you do make them.
Yeah. I think one thing investors have to understand going into any new investment is they'll never get the bottom and they'll never get the top. If you do get a bottom and get a top, it's once in a lifetime. Like it's very, very rare. And so, I kind of use a back of an envelope formula, and I try to use it as most of the time. Sometimes, stocks move crazily, and you're often not able to do that. And a lot of these stocks trade such low volumes that it's often hard to sell when you want to sell, or even buy when you want to buy. And, I tend to take fairly chunky positions in a small group of companies. And, it might take me 6 or 12 months to accumulate a position that I'm interested in accumulating. And when I'm selling as well, it'll take me that amount of time to sell my position because, these stocks, are just so illiquid. But a good rule of thumb is I kind of, when a stock goes up 100%, I'm going to take notice of it. I go, I look at it. Okay, what's happening? Is this, is it due to a drill result? Is it, what's happened? What's made this company go up 100%? And often I'll sell 10 or 20% of my position just to get a little bit of money off the table. I may not. I might wait for 2 or 300%, just because maybe it's the drill hole they got was fantastic, um, um, there's, I'm talking to management, they're giving me a viewpoint. I'm looking at their financials. They don't have to raise capital, so they're not going to dilute the company. So they've got some tailwind behind them, and they're the stock's on a move. So, but I can tell you by a 300% move, I'm definitely out of 25% of my position. And I don't care what company it is. And if the odd situation occurs where you're actually at 500%, which does happen, and the mining sector is known to, in a bull market, a 500% move, they do happen, which is quite exciting. But I would at 500%, I'd be at half the position. And even though I think it's going to go up 1,000%, or I think it might go up 1,000%, I use discipline and I just say and by that time, you sell 25% of your position up anywhere from 100 to 300%, you're likely going to have your entire investment off the table at that point. If you're lucky enough and have it up 500%, you're going to be into a profit at that point, probably a reasonably nice profit at that point. And the rest of your position, as I said, even at 300% will be free. So at that point, you don't really care that, that stock could go to zero and you still up money on it, right? You don't want to do it to zero, of course, but at that point, it doesn't matter. You can recirculate that profit into your next, idea and just keep rotating your profit. So, your first criteria, 100%, 300%, 500%, and just try to be disciplined. If you're lucky enough to get one of those 10 baggers, 1,000% gain, then great. And they will happen if you're patient, and they don't come often, but when they do, it's all just free money at that point. And that's where you go to the bar and have a beer with your friends. But yeah, it comes down to patience and following the right management teams, following the right, just following the right business.
Yes, really, really good points, Keith. So we have minutes, few minutes left. So just before we wrap up, I'd like to ask this question for the younger audience. So if we have an individual who's still very new to this wealth building path, they want to get involved, but they're very new, and they have so many options with the crypto sector, with the AI, the things that we're talking about. What advice would you have for that person so that they can get involved but don't get burned too quickly?
Well, no one wants to get burned, of course. And, I think you could get burned in crypto. I think you get burned in AI. I don't look at any of these investments really that much differently. It's investment. You're buying a stock, that trades in the market, and you're not running the business. You're not generally, you don't have influence over what the management does. So, you're kind of at the mercy of the macro environment. And maybe right now AI is hot, and a lot of people have been making a lot of money on it. And we have cycles. We had a uranium cycle, a couple of years ago where everyone made money on uranium. We had a lithium cycle, before that when a bunch of people made money there. But you have to remember that it doesn't matter what industry it is, AI or mining. These are cyclical markets, and money flows. You got to watch how the money flows. And I'm a long-term investor, so I take, I invest in management teams, so I generally don't so much worry about money flows because it's not unusual for me to own a stock for 10 years. That may sound crazy for some of your young investors, um, um, but that's just the way I invest. But if, for those people that are trading on a much shorter term basis, they have to really pay attention to money flows. And, right now, in my opinion, and, time will prove me right or wrong, is that we're now seeing money flow out of the major markets. Um, the S&P looks like it's topping. Now, that's, just my opinion. And the Nasdaq as well. Some of these AI stocks look like they're topping. So, I don't know for a fact, but it looks to me very similar to the 2000 and 2002 timeframe. And I remember the dot-com bubble quite well. When the Nasdaq topped, at 5,000 in March of 2000, and within 3 years it was down 80%. I can't predict the Nasdaq down 80% in the next 3 years, but where did that money go? All that money flowed into real estate and metals and the mining sector. And that's why we had a 10-year bull market, from 2002 to 2012 in the mining sector, where people were making 1,000 times their, 10 times their money, getting 1,000% on, and there was dozens and dozens and dozens of them that were doing that, and I think that's the environment that we're getting back into. I think we're going to see a rollover of the major stocks. I'm bullish on AI, but that doesn't mean money's not going to flow out of AI. It doesn't really matter. Amazon stock went to $3 back in 2003. So, and I think it was up as high as $150 or something in 2000. I forget exactly what the numbers were, but I'm not that far off. So, and that's what I think is going to happen to the current major markets, and that money will find a home. And because all these big institutions, all these big hedge funds, they need to go where the money is being made. And the gold sector has proven to outperform the S&P year to date, and it's woken up a lot of people. And we're going to have corrections along the way, as we're seeing in the last day or two, and that's normal, that's healthy. But I still think we're in a bull market, and I think we're turning into a bear market into the major indexes, and that money is, I think, in my opinion, that's going to flow into the mining sector. So whether you're a long-term or short-term trader, I'm not saying put 100% of your money into the mining sector, despite 100% of my money being in the mining sector, but that might be a little bit too risky for some. But for me, that's where my personal money's at.
Right. So Keith, these are all the questions I had. Is there anything else that maybe you would like to mention that we haven't covered?
Yeah, no, I think it just goes down to, being focused, and being a little bit stubborn, and don't let stubbornness fade your mind. But when I say being stubborn, don't let the day-to-day action that we're seeing, like today or yesterday, fade your view, because the markets do go up and down. If you're going to stick to the thesis that you want to own, precious metals companies or copper companies, then stick with that thesis until that thesis is proven wrong for whatever reason. And market gyrations, are going to happen along the way. May give you buying opportunities along the way, depending on your own personal portfolio and how you want to manage your own personal portfolio. But I remember the 10-year bull market from 2002 to 2012 didn't go straight up. There was lots of times in that 10-year period that we thought it was over, and it just kept going. It had 2-3 month corrections, and boom, it took off again. So that's kind of the environment I think we're in, and well, hopefully that proves correct, and hopefully your listeners make a little bit of money over the next 10 years investing in gold and silver.
Yes, definitely. So Keith, I really enjoyed the conversation. Thank you so much for your time, and I hope to have you back on the show.
Great. Nice chatting. Good seeing you.